Hello, welcome. Special episode of Reality Check. We want to really try and understand today the FRDI bill, the bail-in provision which has been causing some concern, and then the defense issued by the government which says you don't need to worry. So first, the bill itself. What exactly is this bill trying to do? Now, the bill is supposed to set up a mechanism that will help financial institutions in distress. And remember, that means all those banks that are problemed, and you keep hearing about bank debt. It's supposed to deal with the insolvency of banks. There is a resolution body that is going to be set up. It will be collecting premiums that banks are paying to insure deposits. Bill, of course, is not specifying the exact quantum of deposits or what the insurance is, but essentially this is a bill that is supposed to provide stability to the financial order. A bank going bust or a financial institution going bust should not destabilize the entire system. That's what it is supposed to do. Now, what is this bail-in? The bail-in clause that is causing people so much concern. This is a clause in the bill that allows a bank in distress, apparently, to use deposits to stay afloat, which means people have deposited money in the bank and the bank potentially has the ability to use those deposits. Those fixed deposits that you may have in a bank can be converted into equity. Now, why are people scared? People are scared about this essentially because they are saying, look, this is a problem. Fixed deposits, we were supposed to be completely and totally safe. We don't want that to be converted into equity. We don't want to be losing that money. Let me just try and explain this in slightly more detail if I can just look at it. This is the way a bail-in is theoretically supposed to be. Let's take a look at this. This is Bank X. Let's say it has lent, 100,000 crores to some dodgy corporates or whoever they are. Those corporates are refusing to return the money to the bank, and therefore the bank is in trouble. The bank is likely to go bust. This is where you have a problem, you have a systemic issue. Now, normally what would be happening, what happened in 2009, 2008, other things, the government really steps in, provides some money to the bank and bails it out. That's called a bailout. The government steps in, the taxpayers' money essentially is going in to help the banks. It's unfortunate that situation is arising. It's really because those corporates haven't repaid, but here the government is doing it. In a bail-in, it's slightly different. It's not the government which is helping provide the money. It is those depositors who have got money in that bank. Some of that money gets converted into equity. So it's the depositors who are bailing in the bank as opposed to bailing out the bank. That's what the basic concept is. Now, is this something which has ever happened before? Not too many cases, but it's not that it's never happened. Cyprus is the example that many people actually look at. In the case of Cyprus, this is what happened. 2013, you did have a situation where people above a certain number who had more than a certain amount of money inside it, 33% of their deposits were actually converted, more about 37.5 actually to be precise. That deposit money, those FDs, were converted into equity. So they thought they had a deposit in the bank, and suddenly they don't have a deposit in the bank anymore. 37.5% of that is now equity in that bank. And remember, this is a bank that is potentially not that viable right now. It's distressed. So instead of having a FD, which you think is completely safe, you're suddenly holding equity in that somewhat dubious bank at that particular point in time. All right, now that you've understood what a bail-in is, the big question is, why is the government saying that India has to do this? Why are we getting a FRDI bill at all? Now, the government has been saying repeatedly that this is partly because of the G20. The G20 has decided on a resolution of distress in financial institutions. India is part of G20. That resolution has a provision for bail-in, so India has had to do it. Why is the G20 doing this? G20 was concerned in 2014 and other years after that entire financial crisis, doesn't want banks and others to be collapsing. G20 therefore has said this is what we need to do. That's really the reason why the government says we have this in the first place. However, the government's also been at great pains to say, don't worry about it. We are there, hum hai na. The Prime Minister said, I'm not going to allow depositors to lose money. Jaitley says, in fact, we are committed to strengthen the banks. Jaitley has also said depositors are not going to be using money. So you don't need to worry. Bill is protecting depositors' interests. In fact, the Prime Minister has been saying that repeatedly, including today. And he said, people are being misled if they're getting scared about this.
FRDI, उसको लेकर बहुत बड़ी मात्रा में अफवाहें फैलाई जा रही हैं। सरकार ग्राहकों के हित को सुरक्षित करने के लिए बैंकों में जमा उनकी पूंजी को सुरक्षित रखने के लिए लगातार काम कर रही है, लेकिन खबरें ठीक उससे उल्टी चलाई जा रही है। उद्योग जगत को और आम नागरिकों को भ्रमित करने वाली ऐसी कोशिशों को नाकाम करने में फिक्की जैसी संस्था का भी योगदान जरूरी है।
All right, let's try and understand now what exactly the situation is out here. I do have with me Shankar Iyer, author, economist, who doesn't feel it's that bad. He's joining us. Meera Sanyal is joining us, former country executive, RBS, also been closely associated with the Aam Aadmi Party. Meher Sharma is with us, senior fellow at ORF. Jagdish Shettigar is with us, who's advising Atal Bihari Vajpayee, a range of experts with us to try and help us understand, is it as worrying as some people say it is, or is the Prime Minister right in saying there's really no cause to be concerned? But before I come to any of them, a little earlier in the day, I spoke to a senior Congress leader who's also been, of course, a minister, Anand Sharma, and this is what I asked him. Mr. Anand Sharma, let me just start off by asking you a lot of concerns regarding the entire bail-in provision of this FRDI bill. What is your sense of it? Is it a good step? Is it a bad step? Is it potentially dangerous? What's your take and the take of the Congress party in this?
It is potentially dangerous. It actually threatens the assured security to the small savers and the depositors. You see, the banks primarily function on the depositors' money. Now, in any case, post demonetization, the interests have come down. Now, with the bail-in provision, the assured safety and security, which in fact should have been enhanced, because you can't guarantee or continue with the guarantee of 1 lakh rupees you will get for your savings account or fixed deposits. It has to be raised, but now this compromises even that, because the bail-in provision will put the depositors at par with the unsecured depositors. Second, it is creating conflicts when it comes to banking regulator. Reserve Bank of India is the regulator for the banks. Now, if a bank is going to fail, or if the categorization done of an imminent failure, right, then the depositors have no safety valve, because if the bail-in provision kicks in, and all over the world, the regulation of the banks has been with their central banks. Here they are going to create a draconian regulator who will subsume the functions of the insurance regulator, that is IRDA, banking regulator,
but Mr.
that
Sharma,
is the Reserve Bank of India.
Mr. Sharma, if I can try to, what the government is actually saying, they're talking about international factors. The government is saying that the G20 has passed it a little while back. India, being part of that, really has no option but to go along with what is happening in other parts of the world. Other countries are doing the same.
No, let the government tell us how many G20 countries have taken away banking regulation from by appointing another regulator. That is remains the jurisdiction or the domain of the central banks. Even in case of England, England is a G20 country. Let the government come out with the details. And we are not a developed country as such. What about the safety of the poor people's money? The banks will be in a position to lend only if they have the deposits.
Okay.
Banks function on the people's money.
All right, but if I can just come out with the clarification that the government has said, and I'm quoting, it says the rights of the uninsured depositors are actually now being placed at an elevated status. We don't know what the insurance will be, but the government is saying we are giving protection, and therefore this is just fear-mongering that's taking place.
No, we don't accept that. No, if you read the bill carefully, we are not at all satisfied. We are and shall remain opposed, because the first charge in the case of an imminent failure of a bank or a insurance company has to be that of the depositor. you cannot equate the depositor with others. That they are doing.
All right. So you're saying there should be absolutely no comparison between a depositor, somebody who's put a fixed deposit inside a bank, that person should not be compared or even put into a list of orders with the shareholder of a bank. Is that what you're saying?
Exactly, that is one. And secondly, even this guarantee of 1 lakh rupee to be paid back has to be raised. That's what the demand has been throughout the country, that this 1 lakh rupee guarantee from the Reserve Bank is an old guarantee. Now things have changed. People have more money in their savings account in the fixed deposits. So that guarantee has to go up. If somebody has 50 lakhs, you cannot say take 1 lakh and go. And now with this bail-in provision, bailout is when the government invests, when the government puts in its money. Why the government is not putting in money for bailouts of the banks or the financial institutions which are under any threat or imminent threat? Why you are risking people's money? But equally important, Vikram, as I mentioned, is that you cannot have another regulator for banks apart from the Reserve Bank of India.
Okay. Now, Arun Jaitley has said, and in a tweet, the finance minister has said that this entire matter is pending before a standing committee. So, what's the sort of a stance?
Before the select committee.
Yeah. So what's the sort of stance that the Congress party is going to be taking on that? No,
we have strong reservations. In the present form, we will not accept this bill. We will oppose it.
All right. Congress party is saying very clearly it is going to oppose it. In a couple of minutes, I'm going to be playing for you some details about Arun Jaitley has said, and he's spoken at length about all those issues that have just come up. I'll play that for you. But let me just get all of my guests into it. Shankar, let me get you in first. Governments, so two clear views coming in. You know, the opposition, many others saying you can't ever, somebody has put money into a fixed deposit, they think that money is 100% safe. You should not be using that to suddenly say, okay, it's going to go into the equity of the bank. Other people are saying even today, only 1 lakh of that deposit is actually insured. The rest is in any case perhaps open for, you know, something to happen to it.
So, as of today, a depositor puts his money in the bank and believes it to be risk-free because of an explicit guarantee of deposit insurance and an implicit guarantee that the sovereign will intervene. This bill unsettles both those percepts. The second and more important point is, it is not the same as now, because there is an explicit provision, section 52, which says that bail-in provisions can be brought in. I am mystified at the timing of this bill and whether any attention has been paid to the context of the Indian landscape. In India, 74% of the deposits are with government banks. The ownership of government and political management has its own issues. It is all well for countries in the G20. The US and Canada have passed it, Europe has it, but the landscape is very different. You have a provision for class action suits in Europe. Here you have trouble getting an ordinary charge or problem redressed in the Reserve Bank of India. The second other more important point is 24 countries are signatories to this as of now, of which 14, including all the BRICS nations, Australia, Argentina, Indonesia, they have not yet inducted the bail-in. So why is India rushing where others fear to tread?
All right, Meera Sanyal, let me just get you in on this. Now, even today, if you have more than 1 lakh rupees as a deposit, then theoretically that money can go in case the bank fails. And the argument that the government and others will be making is to say it's better than a systemic failure. Would you agree with that view? And that systemic failure is something to be guarded against. And why should the taxpayers' money be put to prevent a systemic failure? How would you respond to those?
You know, Vikram, I think a lot of people believe that the banking system runs on money. But the truth is actually that the banking system runs on trust. Depositors place money with a bank because they have faith that they are going to get their money back and that the bankers are going to make good loans, not bad loans. The problem with the Indian banking system at the moment is that there is a growing distrust in bankers because of the number of bad loans that they have made. It's absolutely clear to everyone that because of corruption, collusion, cronyism, and sometimes just sheer carelessness, a huge number of bad loans have been made. And these now are amounting to 10 lakh crores as of September 2017. Now the problem is, as Shankar has pointed out, the timing of this bill is very, very harmful, because we all know, it's widely known in the public domain, that the government has only provided for 2 lakh crores. So we have a huge gap of 8 lakh crores, and if the government doesn't bail out the banks, then it's plain as daylight that the depositors are going to have to bail in. And as Shankar has said, all this time there was an implicit guarantee that the government would stand behind the banks. You raised a question with Mr. Sharma saying, why is it that India, should not sign if everyone else has signed? I'd like to make 2 points. The first is, their banking system is not nationalized. Ours is. And one of the reasons that the banking system was nationalized is that depositor money should be safe.
All right, Meera, I heard you. I heard you. Let me just get Jagdish in on this. Jagdish, the point being made is a lot of that. So yes, there are lots of bad debts, and that's frankly, it's not this government's fault alone. It's been allowed to happen for a while, but there's a lot of cronyism. So all of these bad loans are there, and now depositors are genuinely concerned. We are going to be left holding the can, and if a small person has put money into a fixed deposit, he thinks that money is safe. He or she thinks that money is safe. They're accepting a 3 to 4% return instead of equity return, which is 15 or 16%, because they believe that money is safe. If they now begin to feel that money is not safe, they may well leave PSU banks and shift that money to other banks, or certainly that trust could be affected. Is that a genuine concern?
I think this concern is over-exaggerated, and even the bill, because looking at the present situation, and if you look at the situation in totality, I personally feel there is no need for such bill, because especially after the bankruptcy code, because the point Meera raised it, that is NPA. Now it is exactly to tackle that the bankruptcy code has been introduced. Now after the bankruptcy code, now the bankers are in a position to take care of their bad debt.
So you are saying some of the reasons that this is trying to sort out may be sorted out through the bankruptcy code.
This is extra caution. Now in case the financial institution going, losing the money, but there again, then another precautionary step is that now we have already committed the Basel III norms. So that is why recently the government has recapitalization.
Let me get you in on this. Let me get you in on this. Are you sharing the concern, or is there fear mongering happening on this?
Well, I think that look, the statements that the Prime Minister and the Finance Minister have made are fairly straightforward. They're saying, look, it would be political suicide for any government to take money from depositors if the bank fails.
And that's true, by the way. And by the way, if you look at the order in which it has to be done, first it is the shareholders' money that will go, then it is unsecured creditors will go, then it is government dues, and then you start soaking out depositors.
That's how it's supposed to go. The essential problem here is that, look, I can then turn around and say, thank you, Mr. Prime Minister, Mr. Finance Minister, I believe you won't do this. I don't know what will happen 5 years, 7 years, 10 years down the line. All right, when you write a law, you're writing it for, decades to come. You're writing it
including other governments, including
unforeseen situations. And when you are putting your money in your bank, and a bank is a depositor, you're not going to say, okay, I'm putting it in here because Narendra Modi will protect it. You're saying, I'm putting it in here because the law protects me. All right, even long after Narendra Modi has left 7RCR. So the question is, you need to be able to come out with a robust defense of this bill, which does not involve saying, I would never do this to you, I'm here.
Okay. valid point. Don't, and I'm running out of time, so just going to quickly get reactions from all of you. He says the danger of having it in a law is, even if this government doesn't misuse it, or the next government doesn't misuse it, once it's a law, somebody could come along and misuse it when you're least expecting it.
No, anyway, this bill will be introduced in the parliament. If anybody has got any concern, it could be discussed, it can be referred to the select committee, and definitely whatever the apprehensions, that will be taken care of.
And you think that might well happen?
Yeah. And the important point is, as he has pointed out, which government has got that, whether it's a BJP or the Congress government, which government has got the suicidal upstarts of going
then that's why have it as a law. So, Meera Sainia, the point being made is, which I think is also what the government has said is, look, we're not crazy. Why would we ever take depositors' money and use it for this? But then I guess as May just pointed out, why have it in the law in any case? Which is why maybe this may be phased out. These particular provisions may not be there when the bill actually goes in for voting. Meera?
Well, you know, what I will say, Vikram, is that certainly this government has done some fairly strange things in the last 2 years. But looking forward, you know, banks go bankrupt, A, when they run out of money, B, when people lose faith in them. And the way this bill has been presented and the way it's being defended, people are getting extremely worried. And for the government to say, trust me, I'm not going to do anything stupid, well, you know, in fairness, they've done some very, very strange things in the last 2 years.
Okay, fine.
And
I
the
just
Prime
have time
Minister,
for a
the
last
Honourable Prime
word
Minister,
from
for
you,
example, has
Shankar.
said people can, you know,
this
change their
provision will
money
be
till
there when the bill
31st of
finally
March.
goes up to vote?
That was changed. So where is the faith in the system?
Okay. Meera, we heard you. Shankar, quick last word from you. Do you think this provision is going to be there when the bill goes in for voting?
Well, despite my trust of the Prime Minister's office and the Finance Minister's office, I hope the provision goes, because as James Madison says in Hamilton Papers, because men are not angels, we need governments, and because we need, we need institutional mechanisms.
Okay.
I will not trust the word of a person. I would have to go to court with the words in the law. And therefore, I think by presenting this bill itself, there is a tendency of suicide in this. It is a suicidal idea to use a bill like this, bring in a bill like this when you have 10 lakh crores of NPAs and when you are owning 74% of the banking. I think there needs to be a review. Maybe they form the resolution corporation first. Implicit
all right,
trust
Shankar, I'm going to have to leave it there.
And then you should do it.
All right, Shankar, gentlemen, I'm going to have to leave it there just for the moment. Thank you so much for joining us. Let's see if these provisions actually go through finally, because there are certainly reasons to be worried about this. And yes, it's an election year, so I'm not necessarily sure whether the government would want to push economic adventurism this year. But then, as Meera says, who knows? Anything can happen. Thanks a lot for watching. We'll be back tomorrow.